In this video, we're going to take a look at STLD Dynamics, ticker symbol STLD, and I'll outline my reasons why it's now my contender for a high conviction trade for stock options, premium sellers, and traders of the wheel strategy. Before going forward, please understand this video is made for entertainment purposes only, and none of what I'm about to say in this video constitutes any financial advice. This is my own opinion about a publicly traded company, and I urge you to research it yourself before you make any of your own financial decisions. And to add to that, as an options premium seller using the wheel strategy, I am primarily interested in stocks that will perform well or even sideways in the short to mid term, a time frame of around 30 to 90 days. So if you're a day trader or a long-term investor, the thesis I'm about to present may not match with your trading strategy. So please keep that in mind. Okay, so on to the analysis. STLD Dynamics is a US-based steel manufacturer and metal recycler with its head office in Fort Wayne, Indiana. Its main operation is manufacturing rolled steel sheets using an environmentally friendly process. It processes discarded scrap steel into prime steel. In turn, this eliminates the need to mine iron ore and also cuts down on coal and limestone usage and therefore greatly reduces its energy requirements. Carbon emissions are far lower as a result. The steel that is produced by STLD Dynamics is used to make a wide range of consumables, including cars, appliances, garage doors, roofing panels, office furniture, tubing, ships, and so on. STLD Dynamics is the fourth largest steel manufacturer in the United States and was founded in 1993, with its initial IPO being in 1996 on the Nasdaq exchange. It has a market cap of $19.12 billion, putting it firmly in the large market cap group. It employs 12,000 full-time workers in its two main production complexes in Columbus, Indiana and East Central Mississippi, and as well as its three other facilities, all within the eastern central US. As you can see, STLD Dynamics' stock performance has been nothing short of meteoric over the past 10 years, with close to a 650% increase in share price. Looking more recently, it has by far outperformed the S&P 500 over the past 12 months, showing an 18% increase compared to the S&P 500's minus 6%. And year to date, it has risen over 15%. So how about its performance outlook, and why have I shortlisted this stock? Here I've got our wheel strategy tool open on the wheel calculator tab. This is one of 7 tools combined within our wheel strategy tool. See a link to our website in the description below for more info and download links. Now, as you can see, I've got 8 stocks open for comparison, and these 8 stocks were chosen through the use of TradingView's screener and then a quick technical analysis of charts to find well-performing, secure companies with healthy fundamentals. And I ended up with these 8 stocks. If you're interested in learning about the selection process, check out our video training course on our website. I've selected strike prices for each stock based on chart technical analysis and standard deviation. More on that soon. And I selected expiration dates within 30 to 60 days, which I find is the sweet spot for selling puts in the wheel strategy. Now, as you can see, this gave us comparisons of overall expected premium collected and premium annualized figures. Using this, I did a quick analysis of each company, looking at recent earnings and key fundamentals, further chart technical analysis, company news and analyst targets. And from that data, the stock stood out the most was STLD. And why was that? Well, when choosing a stock to trade the options wheel strategy on, you must ask yourself one fundamental question. Would I be happy to own this stock? Its potential premium might not be the highest out of the 8, but many other indications stood out to me which proved that if I were to be assigned the stock, I would be confident holding it, collecting dividends along the way, and selling it in the near term for a total overall profit. So let's look at the factors which has led to this selection. There appears to be a lot of positive news surrounding STLD at the moment. Earnings were released just a couple of days ago, which was a beat of over 10%, although the revenue was a slight miss. This has resulted in an update to some analyst targets, with Credit Suisse raising their price target to $115. Likewise, Zacks Equity Research reported on April 19th that the stock is likely being undervalued at the moment. Add this to the strength of its earnings outlook, and we can clearly see that STLD is an impressive value stock right now. STLD Dynamics' CEO Mark Millett recently announced that the outlook is positive, saying order entry activities continues to be strong across all our businesses. We believe North America steel consumption will increase in 2023, and that demand for lower carbon emission US-produced steel products, coupled with lower imports, will support steel pricing. Now, his highlighting of pricing and demand is a key point in analysing this stock in the short term. I've been keeping an eye on STLD and the steel industry for the last few months, and steel prices have been the key concern. Steel prices have risen substantially over the past 6 months, but is now showing a decrease, which according to analysts should remain low for the rest of the year. Along with this, the demand for steel is stabilising and/or rising, and this looks to continue as explained in a press release from the World Steel Association on April 18th. The World Steel Association has today released its short-range outlook steel demand forecast for 2023 and 2024. World Steel forecasts that this year demand will see a 2.3 rebound. Steel demand is forecast to grow by 1.7% in 2024. Manufacturing is expected to lead the recovery. So all this points to a positive outlook for the steel sector as well as for STLD. Looking at some key financials, we can see that price to earnings is just 5.93, which is much lower than the steel industry average of around 10. They also issue quarterly dividends at a current rate of 1.53%. Their last dividend payout was 0.425 per share. So if you owned 100 shares, that would equate to $42.50 for that quarter. Looking at revenue growth, we can see that revenues have increased substantially, especially since 2020, more than doubling in the 2 years since then to over 22 billion. And you can see strong increases in gross profit and operating income. Net income has been comfortably positive for the last 3 years, which is great to see. Onto their balance sheet and their current assets versus current liabilities. Current assets is 7.64 billion compared to current liabilities of just 2.03 billion. A big check mark there. And they have 1.63 billion in cash, which would be more than enough to pay off their short-term debt of 76.18 million 2 times over if the worst came to worst. So another thumbs up there. Over to free cash flow. As you can see, they have a sizable amount of cash on hand of 3.55 billion, and this has grown substantially over the past 3 years. This means the company is in a healthy situation where it has cash to pay out dividends, buy back shares, make acquisitions, and so on. Just a couple of quick stats. EBITDA margin is in the 20% range, which is good. S&P 500 average is around 10 to 16%. Return on equity is extremely good at 44%. Return on capital is well over the 10% minimum expected, and debt to equity is well under 1, indicating that the company is easily funding the majority of its activities. So overall, this gives me great confidence in the financial health of STLD Dynamics. We want to select companies that can survive in times of economic hardship and thrive when things are good. Okay, so here we have the daily chart showing the past 12 months. STLD has been on a nice upward trend in a very clear channel. Looking over the past 6 months, the stock is bouncing nicely off the +2 and -2 standard deviation lines and is now sitting just below the -1 standard deviation. And this is a good place to open a trade. I've been watching this stock for a few months now, but the higher price was putting me off. I'm much more comfortable with a strike at $95. If I were to buy this stock, $95 per share is a price I'd be happy to pay for it, which is approximately 1.5 standard deviations lower than its current price, a drop of around 14%. The stock is trading nicely above the 200-day simple moving average, which is imperative, and close to the 50-day simple moving average. I prefer to be closer. However, they are closing in on each other. The stock has also been closing above the 9-day simple moving average for 5 days straight now, which shows good confirmation of price strength. There is clear support at the 100 level and also the $95 level, where our strike is set. The 14-day RSI line is moving above the 50 line after around 5 or 6 weeks in undersold territory. Looking back at SRI over the past couple of years, you can see that each time RSI climbs above 50, the stock goes on an extended run. Finally, looking at the option chain for our trade, we can see that at the strike of 95, delta is 0.164, which is good. It should be below 0.3 or even better below 0.2. So come Monday or Tuesday, I'll be giving this trade a final assessment and, all being well, sell a put to open the trade. And there we go. Hopefully that was a useful and informative video. This is the first trade idea video I've done, so please let me know if you want more in the future down in the comments below. And also please like and subscribe to receive more option trading idea videos. If you enjoyed this video and want to see more option trading videos, head on over to our website at wheeloptiontraders.com. Here you'll find our Options Wheel Strategy Trading video course. We have over 50 videos and counting, from the basics of understanding and trading options through to using the wheel strategy to get the most out of your options trading. We also have an amazing options wheel strategy tool that you can download. It tracks all your trades in real time and provides key insights to help you with your options trading decisions.